Good evening, late night bloomers. Good evening, everyone from the late night show. It is the Hidden Edge Pod, episode 42. We got myself, Sam, and your boy Chris, UNH Patel. What's up, sir? How are you?
Good, man. Just dealing with some administrative stuff, but we're doing good.
That's
BMNR
perfect.
is
That's
doing
perfect.
its thing, man.
No, Chris did not fall asleep. That was me. I had to put my daughter to bed. So, that always takes a little bit of time. And no, I'm PDT, all right? I'm Pacific. I'm not an Indian standard time, man. Come on. Give me a little bit of excuse. But
Filipino. It's
anyways,
Filipino time.
Filipino time. Is that I don't think that's IST. But anyways, guys, we're gonna get right into it here. So we have a couple things to talk about. More than a few, probably four things to talk about. Pretty solid stuff. The first one is everyone's heard about the news with OpenAI this morning. We had OpenAI is taking a 10% stake in AMD, and in return, OpenAI is going to build 6 gigawatt capacity of data centers using AMD chips. All right. Doesn't have to be the new MI450s that are coming out. Doesn't have to be the 350s. It just has to be AMD. But there's 6 gigawatts of capacity built out for that. Now, the promise is by 2026, they're going to build 1 gigawatt capacity. All right. So I don't know if that's more than one data center or not, but that is going to be done in 2026, and that's going to consist of the MI 450s. That is a lot of moolah. In return, OpenAI is getting 160 million shares of AMD priced at 1 cent, and these are actually warrants. So it's warrants for 160 million shares. So what is that, like 1.6 million warrants priced at basically 1 cent, right? So they can execute them if they want to at any time. So this is the option. They're not necessarily diluting AMD yet. It is the option to execute those warrants. So I don't know, unless AMD goes bankrupt in the next few years, I think they're pretty much in the clear that is the assumed dilution. The question is AMD going to 300? And the next question is, who's going to benefit from this, right? And I think the price action from today pretty much tells you exactly who's going to benefit from it. Meanwhile, AMD is still up over 20% today. I mean, that's no joke, right? Certainly heading toward $300, but we pulled back about 10% from pretty much all-time highs. It hit all-time highs in the pre-market. The all-time high is $227.30. It's not $228. I went back to August 3rd. No, sorry, I think that was May. I forget exactly which day in May, but it was in 2024. It hit $227.30 intraday. We crossed that pre-market, but we were not above that during the cash session, I believe. Need to confirm that one. So yeah, happy for your 3 shares of AMD. So yeah, good. Congratulations. Hey, listen, that means those 3 shares went up 20% or more today. So you got to be happy about that one. No, we're not doing rubric today. I actually went over the rubric thesis on Amit's market close last Friday. So you can go ahead and check through the channel videos. But again, thank you everyone for attending here. Really appreciate you all being here, especially during this late night. Mr. Patel, what are your thoughts on this? Let's not get into the beneficiaries because I think you and I are both kind of in agreement on who's actually going to benefit from this. But
Yeah.
what are your thoughts on this?
I mean, I think it just shows that there's still a lot of capital out there willing to get deployed in this AI capex cycle. So, I think a lot of people are scared of the AI bubble. And while I do think that at some point we are going to hit like peak growth in AI capex, it's not yet, right? There's still a lot more room for this thing to go higher. The hyperscalers have not indicated that they're at any point right now willing to pull back on spending. And unlike the 2000s bubble where you had a lot of the build outs being financed by debt, this one is being financed by free cash flow from the hyperscalers. So as the hyperscalers are generating more and more free cash flow, they're literally pumping it back into building out these data centers. So the other thing that actually was a little bit more I thought interesting on my part was just Now the Europeans are talking about building out their own infrastructure to make sure that they don't fall behind. So it's almost like a bit of a tailwind where you've got American companies kind of boosting their AI capex numbers to make sure that they stay ahead. And then you have the rest of the world, including Europe and Asia, who are building out data centers. So they're like, we don't want to fall behind. So even though I think at some point the bubble will get too big, it doesn't seem like that's the case as of right now. I think as of right now, you know, the general market behind AI spending is robust, and for the foreseeable future, it looks like it looks like it's going to stay there. And most of these companies, when they call out these build outs, they're not talking about building out like, hey, we're going to spend a couple of quarters of capex. No, they're like, hey, next year we're going to spend $100 billion. So the tail on AI spend is very long, right? So at some point, I think we will see the inflection point, but as far as I can see right now, it doesn't seem to be any indicators that that's there. But I will say this deal with AMD does make me a little bit cautious in that now you're starting to see a lot of round tripping, right? With regards to like money being passed around from one company to another. And now it's like, hey, I'll take a stake in here and I'll take a stake in there. And it's like a spaghetti web of ownership structures. And the thing is, it does bring up the question of conflict of interest. It's like Nvidia paid OpenAI for OpenAI to take that money and buy AMD chips, right? So it's a very delicate balance of how OpenAI is playing all of this. But I have no doubt that OpenAI is probably going to be going to end up being valued at probably like $1 trillion at least. Just the amount of people that use OpenAI stuff, their APIs. I think today there was another big news, like, and you use them. What are they called? Notion spent
Yeah,
over a billion
I use
tokens.
Notion. Yeah,
Yeah,
I must have
Notion's
missed that one actually.
yeah,
Damn, that's always been a company I wanted to invest in. Um,
yeah.
I wanted to invest in a year ago. They actually have a Fundrise actually has um, private funds that you can invest in. It's like some sort of ETF, but it's not really an ETF. But I was invested in it and did have some Notion, but I'm like 10% and
Mm.
mostly Databricks. But I got out of that. But I mean, yeah, if I was able to invest in like a private seed round for Notion, I would have definitely done that because, dude, that company is definitely going to go places. I mean, they're going to replace OneNote, all these note taking tools are going to take it. But anyway, sorry, go ahead.
No. So I was just trying to find the article
Oh,
about
okay.
the Notion ticket thing, the token thing. So let me see if I can
I
find
thought I
it.
saw someone
Right
post
here.
that in
Here.
Discord. Oh, okay, here, go ahead and share your screen.
Boom. So apparently what OpenAI did was send them like a token. So they spent 1 trillion tokens on OpenAI. Look at that. So the demand for OpenAI's APIs are still there. So I think a lot of people are just thinking, well, it's just a $20 a month Chat GPT subscription. It's like, no, it's more than that. Now you have corporations utilizing OpenAI's what's that thing called? APIs to do their own
Yeah,
products and software. And then what happens is when you buy the software from, let's say, Notion, or you have a subscription with Notion, even though you're basically giving money to Notion, Notion is giving money to OpenAI. And so OpenAI can over time develop into a business, right? So it could be another hyperscaler, but it could be like a AI focused hyperscaler compared to, like, let's say, the Googles of the world and Amazons and Microsoft. So yeah.
yeah. No, I mean, I agree with you. We spoke about this earlier. There's round tripping, right? Like all the money's going to come back, and it started somewhere, but like this guy's paying more, so it's going to go more and more. Oh, by the way, hey, Starbucks water, baby. Yeah,
I just refilled
start.
this. I just have the can.
Hey, you don't have to say
But it,
that. You don't have to say that.
huh?
You don't have to say that. That's real Starbucks water, not recycled water you just put back in there and use a Starbucks cup. Not like me, man. I'm the
Yeah.
cheap one, not you.
I'm cheap as hell, bro. What are you talking about?
Okay.
I'm a
Okay,
Patel.
fine. We're both
We're the
cheap.
definition of cheap.
Hey, am I lagging, by the way? Am I good?
No, you're
Okay,
fine.
good,
You're
good.
fine.
Yeah, dude, I think there's a lot of round tripping going on. But my thing is that, like, everyone's talking about it.
Mhm.
CNBC's talking about it. Now, if everyone's talking about it, then the market doesn't care, right? Like, the
Mhm.
market does not care because the prices are still going up. And at the end of the day, the earnings growth is going to accelerate and the bottom line is going to grow. Like that, that's it. The market just doesn't care. Like it's so blatantly obvious. Like I feel like you were talking about this before like everyone was talking about. Well, like there were people that were talking about, but like you really like brought it up, you know, and there were a few people who brought it up as well. But I just feel like it's just ad nauseum now, right? Like it was all over
Mhm.
CNBC this morning. Everyone was talking about it. And it's one of those things like the older news gets, the more priced in it is in the market. And I will tell you right now, this is priced in. Now, what's not priced in is when that first domino falls. All right.
Mhm.
So we don't know when that's going to be. I don't think it's going to be for a while. And when it does, I'm pretty sure everyone's going to be ready for it, which will just dampen the effect of it. Right. So I think I'm going to spend like the next few years just enjoying the bull market versus like trying
Mhm.
to call the top. Like there's too many people that like try to call the top, try to call the top, try to call the, you know, at some point, like everyone's going to capitulate and that's when it's going to happen. But I feel like
Yeah.
even when people capitulate, and this is including myself, like I got 1 foot at the exit, right? I'm
Yeah.
enjoying this bull run right now with these crazy moves that a lot of markets doing. And there's actually a few things that have been lagging a little bit, right? That are definitely, and this is what we're going to get into, is like definitely big beneficiaries of this 6 gigawatt deal. And it's
Mhm.
not just this; it's also Stargate AI, with tens of gigawatts of capacity being built around the entire world. It's all the data centers being built, especially with the miners as well, turning data centers. Like what this isn't like about, you know, the BTC miners are going to be the ones that are going to benefit off. It's like, okay, yeah, obviously they will, but like one thing that people have not really thought about lately, and you could have seen it from the price action today. Okay, there was a company today that while AMD faded, even though it was still up, AMD was still up like 20 something percent. Actually, let me just check right here real quick. Um, yeah, so AMD was still up 23%. I'll share my screen. Okay. Still up 23%. But this was like a nasty this is a pretty nasty fade after the open. So I'm Pacific time, so I don't even know why it's showing this. It should actually be my correct time zone, but this is actually for New York time zone, so I think it just adjusted it. Oh wait, hold on a second here. All right. Anyways, as soon as the market opened, it was not at the all-time high. And oh, you know why? Yeah. So this just basically faded the whole day, like right at the open, just like dropped down, right? But there were a few companies that are still green, and one of them that was green was this guy right here. All right. It didn't start out green. It started out flat. Supermicro started out flat, and throughout the day just rallied. And then AMD just faded. So my question is the market extremely bullish AMD? Is AMD going to 300 or is SMCI going 100? What do you think,
I
Chris?
think, I mean, okay, so my thesis on SMCI, which I posted on X, is very simple. If you
Oh,
just let
yeah.
me just
Why don't you
share
give
my
me the link? Yeah,
yeah, let me just share my screen real quick. Sorry. Okay,
it's all good.
there we go. So if you
Hold
see
up.
right here, these are
There we go.
this is SMCI's margins. Okay. So if you look at the top, right, the top right here is the revenue growth in revenue growth changes right here. So of course, law of big numbers is going to come in. So the first thing is the revenue growth has been kind of coming down a little bit, right? But that's natural. Like their revenues have going up, but their revenue growth rate has been coming down. So one of the things that they've done is they've really been fighting for a lot of market share. And because of that, they've been discounting very heavily. So their net profit margin at the peak in June 2023 was close to about 12%. Since then, it's kind of come down to about 6. Same thing with their EBITDA margins. It just came from 23 to all the way to 6. But what you're seeing now is stabilization. And as that starts to stabilize, let me just show, you can see that demand is absolutely exploding. So right now, this growth rate that you see, 18, 20, 21, and 22, next year, they are guiding for at least $33 billion in revenue. Okay. $33 billion in revenue. So that is a 30% growth rate. This is a reacceleration in growth. And the thing is, if they were just saying that, talking out of their butts and just be like, hey, look, next year we're going to have way more orders, it'd be one thing. But on the other hand, you already see all these hyperscalers talking about how much more money that they're going to be spending on on AI and capex and everything else. So yes, there's probably credibility to that. And one other point that I just want to highlight to people, one of the models that they are shooting for is something that's a little bit more service oriented. Okay, so it's not just a plain hey hardware sales anymore. So I've worked in the hospital system for a long time, and GE did this strategy about 5, 6 years ago. What they did was they sold us the CT machines that we had on our network, and they got a giant contract for all of our CT machines, and they were the lowest bidder. So we're thinking, hey, look, we're getting one over on GE. They're compared to Toshiba and Siemens were the other bidders, we got a great deal. Like GE came under bid. But what we found out later on, of course, is that GE also put in their service contracts. And those service contracts are much, much higher margin and lucrative and long tailed. So for the next 20 years that we have that CT machine, GE is going to be making a higher margin service revenue that's going to way offset the discount that they gave us for the initial buyout of their hardware. So SMCI is doing a very similar thing where they've sold the racks at a, I wouldn't say at a meaningful discount, but at a meaningful discount. So that's why their margins kind of came down. But now that their hyperscalers are really building out, they're working on more services based billing model. So now you're going to start to see that revenue accelerate, of course, because of total sales, but then you're also going to start to see a recovery in margins. And as that margin recovery happens, that's going to fall right back down to the earnings. And so from a fundamental analysis, they're in a good place. I'm sure that you're going to add stuff from a technical analysis. So you go ahead and do that.
Yeah. So thank you for bringing that one in. Let me share my screen here. I actually I forgot what I did in terms of technical analysis. But
wait. Sorry to interrupt. Let me just show one other thing real quick,
dude.
just because it was a quick DD point, just to show people.
That's what it was. Okay, go ahead.
Yeah, right here. So I found. There you go. Just share this.
Hold on.
So this is from OpenAI's website, a picture from their Stargate facility that's being constructed right now. So these are the racks that are over there. Well, it turns out these are the same racks that are sold by Supermicro. They're called the NVL 72s, right? And like I said, this is what it is. So they have a really strong partnership with NVIDIA, but now that you can see Oracle building out their systems, especially that giant facility, a lot of SMCI's orders are going to be coming in the next few years. So as those revenues start to hit the bottom line should start to improve also, So I actually, it's funny, Sam Altman messaged about like the whole AMD deal. So then I kind of like chimed in and I said, hey, are those racks SMCI racks? And a lot of people were like,
did you reply?
Hey, I don't think so. I don't think he'll reply.
Yes, they are. Did you buy his spreads?
Right here, look. So I got 60 likes right here.
Oh, there you go. Everyone's looking at that.
Yeah.
Well, 2.1 million. So that's a lot of people looking at that stuff.
See,
so
look at this person. This guy is like AMD Helios rack stacking MI, blah, blah, blah. Okay, great. Yeah. But guess what? The ones that are in the facility that OpenAI showed were SMCI one. So, yeah.
So check this out, because the chart actually looks pretty bullish. Not like extremely bullish, because it already broke some moving averages. Hold on. Okay, so this is a chart of SMCI, and we got my favorite moving averages. We got the 200-day, which acted as support over here back last month. We have the 50-day moving average, which again acted as support in this little cup and handle situation we got going on here. And we broke out, and we also got the 20 and 50-day crossover. It's not exactly the golden cross for the 50 and the 200, but this is a bullish setup. Once the 20-day goes back above there, then that means you have a short to medium term bullish trend. And if that's intact, that could possibly bring us a little bit higher here to this resistance at 62.27. So this resistance actually goes all the way back to not only July, also back to February, and also back to August 24. So it goes all the way back to 2024, and it just plowed right through back when it was, when we had basically the beginning of this crazy bull market in the beginning of January. And then over here was when we had the infamous top in SMCI, and then you started to get all of the accounting issues and whatever. And it honestly feels like that was not that long time ago, but it actually was a good amount of time ago. And I think you you did this, right? Or was it
Mm-hmm.
this? Okay, so you did that. So this is going to be round two for us. This is like a Celsius, right?
It's like the gift that keeps on
It's
giving.
like this is like the Celsius move, but I got to be honest. I think this time it's going to go. Like it's going to go, right? If
Hmm.
you think about, you're just discussing the racks for OpenAI and how they're using well, those are AMD racks, right? But let's think about let's think about what Supermicro actually does, right? They build racks and they build servers. Okay, um, it's really them or Dell. There's only two options, right? The question is, who's going to get the most from this? I don't think that I know per se. The chart looks good for me, so I got in, and you got in as well. But we do know that they have guided a pretty hefty guidance for next year, right? But you saw the earnings; the market sold it off anyway. Went as low as around $40 and bottom around the 200 day. So we could have a bit of recovery. And like I pointed out before, okay, if you look at this in the long term, this is kind of a cup, and this is kind of like a handle right here. Kind of a deep handle, not really my favorite, but we did bounce off of some critical moving averages over here. Like, I'm very simple when it comes to TA. I don't get too sophisticated. This is really all I need. And I got to be honest, like, I know a lot of people on Twitter who like kind of talked about just keeping it simple, and really just keeping it simple is the way to go. So, um, they build the servers, right? So that's what they do. They there's all the components. There's the GPUs, the CPUs, the hard drives, the memory, and all that stuff. And it gets built into a server, which is basically the chassis where all those components get built into. And then you install the operating system. And you throw the servers into usually like a 2U rack, or no, it's a big rack, and then it just takes up like two spaces. So that's 2 units, and you just stack them all together with their cooling, whatever it is, and like that's your rack, right? And this is actually going to get a little bit into the weeds of IREN, which is something I want to talk about as well. But it's either them or Dell, right? I know there's HP and there's other companies as well, but like the big players in this entire field is really them or Dell. Like those are the big players. And in fact, I would even argue like Dell is probably not rolling out things as much as Supermicro. Supermicro really specializes in this. They've been specializing for a while, and they do diversify in all their business as well. But this is their business, right? They want to build those racks because it includes everything. It includes the NVIDIA chips. In this case, it might include the AMD chips and so on. And we are in a picks and shovel secular theme right now, where everything that's with picks and shovels is ripping, right? It's not just Supermicro that's going to benefit from it. It's also going to be Micron. Micron is pretty much at all-time highs. It is at all-time highs. All right. It's going to be Astera Labs. Astera Labs was up 10% today. Did anyone realize that? No one really talked about that, right? This one I know for sure was up because I sold it, but there are a couple of other things I have sold that have gone up, but I would say that this is a big beneficiary. Look at this chart too. Look at this chart for Astera Labs. Closed right on the 20-day after breaking through it with all that volume, right?
By the way, your boys over at Nebius, they use Supermicro too.
Yeah, man. I mean, Ne- Nebius is obviously going to benefit from this, but not in this direct sense,
No,
unless
no. What
there's
I'm saying is
OpenAI
the
contracts done.
breadth of growth for SMCI's customer base is
Yeah.
very strong. It's
Well,
not just hey the hyperscalers; it's the other companies that build around it as
yeah.
well.
If you think about this whole build out and how we are capacity constraint, right? And then it's going to be energy constraint, which I would argue is already happening right now. Who builds the servers?
Yeah. Yeah.
Super micros, man, super micros. So I would think this is like a pretty obvious play. The thing is that I feel like the market hasn't really realized that, and I think when the market realizes that, it's gonna take off, right? But as I
Yeah.
was saying before, it probably won't be a straight line. Okay, there is there's some. I would say this is a very strong resistance right here, but the volume isn't like really there yet. But if we get like a volume, if we get a bar like this or like these over here, like days in a row, that's confirmation, right? That's
Yeah.
confirmation that's happening. Right now, it's like the market is just balls to the wall bullish. So, yeah, I think that does it with that. You got anything else to add with the SMCI, man?
Yeah. Yeah. Let me just share a quick
Yep.
thing real quick.
Should we go
So
VRT with cooling? I mean, VRT is obviously a winner here, but I'm not trying to. I'm just going for the picks and shovels. This is obviously a picks and shovel play, but it's too niche for me. Uh, and actually, let me look at the VRT chart. I mean, they're probably going to be a winner, right?
yeah,
They're
could you
probably
share
a winner,
mine while you do
if
that
I'm
real quick?
honest. Yeah.
So you can see here from a volume profile, basically majority of the people that bought, they're buying right here. The most amount of volume in the last what is it, 3.5 years has been right here at that 40 mark. So you can safely say that if there's going to be bounces, it'll probably be around this 40 mark. So I think we've pretty much seen, I mean, it could come down a little bit and bounce off of it, but you can see this giant gap and literally it'll fill up all the way here. So it could, like I said, get to where it needs to go over the next let's just say next 12 months, right? Because it's always going to have its up and downs. Right now the RSI is kind of high for it, and it's always bounced off of this 70 plus RSI. So this is where you'd have to just be a little bit, like, okay, maybe I can wait for a minor pullback. Let's say if something happens in the end of October where there's just some news comes out and that's when markets get oversold and it gets oversold with it, it could be a better entry point. But from what I can see, this is probably going to be around the time that you would really ideally want to buy in the 40s. Right now it's still pretty good in 55, especially if the longer range target is much higher. So, yeah.
So I think that about does it with. Excuse me. That about does it with SMCI. Let's go ahead and move on to, I mean, a little bit of something that's basically just been going up every single day. And I do know why it's going up every single day. And I'm going to share with you guys my price targets. But first, there's actually a particular clip that I want to play from a recent interview with the IREN CEO or co-CEO Dan Roberts. It's actually both brothers that are running the company, and Daniel Roberts was recently interviewed during a conference along with the CCO Rhea Williams. But while I look for that particular thing, do you just want to roll with something real quick for a minute? Because I want to find the exact same part because I listened to this earlier, but I didn't take the timestamp. I don't want to play the
Yeah.
whole thing.
Yeah, just one other comment just on Oscar real quick, why it's ripping overnight and why Molina and Centene are also doing a little bit okay overnight. There's talks that President Trump said that extensions for ACA are in the works. And so the biggest beneficiary is Oscar, which is a direct play on ACA. United Healthcare, Elevance, and everyone else has not, that they don't have the same level of exposure to the ACA marketplace as the other guys do. So just from like a recovery standpoint, I think the bottom in healthcare, managed healthcare is in. I think margins will improve next year and then improve even further the year after that. So the key to this is going to be for recovery is just making sure that you're picking the right healthcare company depending on which catalyst you're looking for. Right. So the current catalyst that we're looking for Oscar is ACA subsidy extensions, which will benefit them tremendously. And it's done extremely well. So, yeah. Yeah. Really not much else, to be honest with you.
Yeah, that was a short one. I can't find the exact place of this. But one thing that, hold on, let me just bring up Iron right here real quick.
Get on the Weeble, bro. The Weeble app is awesome.
Yeah, I know. It'll just take time to transition into this thing.
Yeah.
IREN be using on solar energy. Yeah. Wait, the specific SMCI play. SMCI play is specifically because they have custom racks for Blackwell. Not that they just sell server mother. Well, so they do sell a lot of custom racks for Blackwell. Correct. But the thing is that this is all being built at scale so quickly that they already guided very good for next year. And this is before we've had all this massive constraint with data center, which we've had for a while with compute, but the theme has just gotten a lot stronger lately. And you've seen all these miners basically start building out data centers, especially with IREN, like 2.9 gigawatts of capacity being built by 2026, or a total of that. So they're going to basically be adding on 2 gigawatts. And then you have all these Stargate deals coming out. And you have this one with AMD and OpenAI. And you have even more happening with Nebius and Microsoft. And then you have all these people buying more NVIDIA chips. Like, it just, let's connect the dots here. Okay. If everyone's going to be making more money in this, of course SMCI is going to be making more money. But this all happened like after the guidance, right? So the market probably hasn't really realized that yet. In my opinion, I think that it is starting to realize it. It is starting to price it in, but it hasn't. They haven't seen the numbers yet, right? So we'll see what happens with that. Anyways, I don't want to talk about that one too much. I wanted to get into IREN. So this is the chart from IREN. Obviously, like this thing just does not stop going up. Okay, like I can't even. I don't even do T. I don't know how to do TA in this. Like I don't do fib charts. But like this is just price discovery. It's in no man's land, right? And it just does not stop going up. You can pull up RSI, whatever you want. Like, yes, there's going to be a pullback. Okay, guys, like there will be a pullback, but when, right? We should have had a pullback a long time ago. We barely even pulled back when it hit the $48 range, but it just keeps going, right? And out of all the miners today, it was IREN and pretty much Bitfarm that were the ones that were up the most. Um, I hate to be like someone who's going to kind of like speculate that something's going to happen soon, but there is some weird abnormal strength with IREN with really nothing new that came through the door, right? Yeah, they had their conference. Yeah, there was like kind of affirmation, certain things, like nothing big, nothing concrete, no major hyperscaler deal came in yet. And I think the market's trying to sniff that out right now. It's waiting. You had Cypher come in with the deal along with TerraWolf with Google. All right. You had Applied Digital come to the deal with CoreWeave along with Core Scientific. Okay. And then you have Riot and CleanSpark basically saying that they have the optionality of switching to data centers and so on. Like they haven't really bought GPUs yet. We'll see. But, you know, it's going to come. I feel like it's going to come. And I'm not trying to like pump it, right? I'm not trying to pump it. It just, I've done the numbers too on my end. And considering how fast they're growing in terms of how much gigawatt capacity that they are estimating by H2 2026, the amount of money they make in the last 12 months is not nearly as much as how much they're going to make once they roll out that gigawatt capacity. Once they roll out that nearly 3 gigawatt capacity. And that's even before they start to expand it because they're continuing to buy more NVIDIA chips. So let's take a look here at my spreadsheet real quick. All right, open this baby up right here. And this was like really interesting. And I'll be honest, this is like fresh. This is like fresh right here. Okay. So, if you guys notice anything wrong with this, please point it out to me. All right. But I mean, these numbers look like pretty. Okay. So, anyways, what I did here was on this left chart here, you could see the price per kilowatt hour. Okay. That is basically how much gets charged to a client for how long they use a particular server, which in this case is AI workloads or neo clouds, right? Neo clouds are not the traditional hyperscalers or not the traditional cloud service providers that's out there where they provide all of the services for your clouds, whether it's databases, storage controllers, EC2 instances, VMs, everything, right? Or functions, whatever it is, Lambdas, anything. This is like focused just on AI compute, right? This is just focused on using serverless functions for applications that need to run inference queries, training, and machine learning, and all that stuff. Like that stuff that's just for that. And that is one of that's the most expensive compute out there on the entire tier of compute, because it is the best hardware you can get. It is the GB300s, GB200s, the MI450s. Okay, it's all the best stuff out there, because you need the best stuff when you're running these models. You need the best stuff when you're training these models. You need the best of the best, right? So let's take the base case here. Okay, let's assume that it's 80 cents per kilowatt hour. Okay, now displace that or aggregate that over the entire year with 2.91 gigawatts of capacity. All right, you're looking at $20 billion of revenue for the base case. But that's assuming we get 100% utilization usage of all of that capacity, which I'm not saying that there's going to have 100% usage, but it might be close. It might be like at least 80%, right? Considering how much demand there is for AI. Now, I gave the adjusted of 80% because I want to assume the worst case possible, right? Just so that I have my bear case, right? Assume that the range is from 80 cents to $1.60 per kilowatt hour. That's the range that research has shown me, and that's what I'm going to go by in this model. Okay, so base case 80 cents per kilowatt hour. And let's be honest, IREN's not going to get the whole thing. Okay, so like let's downsize this a little bit, but we'll do that a little bit later when we get our end of year 2027 stock price. So they're expecting 2.91 gigawatts of capacity by H2 2026. Okay, I'm modeling this out to the end of 2027 because by the time that they finish building it out, that doesn't mean it all comes online. It's going to take time to come online. It's going to take time to make the contracts with the clients. It's going to take time to ramp up and so on, whatever it is. It's going to take a lot of time to do all that. I'm adding another year and a half on top of that, just so I can come up with kind of a solid figure of where we might be in terms of its stock price later on. This is going from the price to sales ratio that it is today compared to the price to sales ratio of CoreWeave, which is at 11 times price to sale. Currently for IREN, the current price to sale is like 100 or something, right? Like it's a little obscene. If you value IREN today, they are overvalued. But a company that's growing at 167% year over year, you got to kind of give it that cushion, right? This isn't CoreWeave, which is growing double digits. This isn't like Amazon, which is growing like 8, 10% or 20%, maybe even for Meta, whatever it is. This is a company that's growing triple digits. This is like a Nebius. This is the reason why Nebius has such a big valuation today based on previous metrics, because in 1 year, that revenue is going to be three times, 4 times for Nebius. For IREN, in 1 year, it's going to be 2 times more, right? Because they're going to be accelerating. It's assumed that they're going to be accelerating. So let's take this for example. We got our top end of the range right here, and we got the top end of the range right here, 1.6. We got the bottom end of the range at 0.8. This is 100% utilization. So taking all of that capacity and getting all the revenue from it. This is the 100% for $1.60 per kilowatt hour. And then I have the 80% of usage just in case. And then we're going to trim a little bit on that one once we get a price target. So the annual revenue for 2.9 gigawatts capacity per kilowatt hour aggregated for the entire year is $20.4 billion. Okay. And then the minimum is $13.6 billion. Okay. Anybody know how much IREN is worth today?
Like 15 billion.
They're worth 15 billion. So by 2027, okay, and I'm no engineer scientist when it comes to data centers, okay? Let's just say they have all that revenue by the end of 2027. That means that in 1 year, they're going to make, for the base case, for the bear case, the low case, they're going to make as much in 1 year as they are worth today. Okay?
Like profit or revenue?
Revenue. This is all revenue. Okay? Data centers are low margin. I'm just assuming revenue because I'm looking at the price to sales model. I'm not looking at cost. We'll get a little bit to cost later because in the interview, Dan Roberts actually does give one key detail that I didn't know until I watched the interview. I kind of thought it was, but I didn't know until I saw the interview. So, anyways, best case, 40 billion. Which means that it's like a 2.5 times, right?
Yeah.
I don't want to assume that. That's a little insane. getting the whole $1.60 plus 100% usage. Okay. But you know what, to be honest, if demand is so strong and there's not enough supply, they
Mhm.
might be able to do 80 to maybe even 90%, which is still pretty up there. And also on top of that, why do you think NVIDIA chips are so expensive? Because there's not enough supply for the demand. So they can
Yeah.
increase the prices and so on, right? And this, you know, contracts, when people make contracts, obviously you're not going to get the whole $1.60. You're gonna have the amount of years, how much capacity you want, and so on. Like they're gonna lease these out before they even get built out, right? So that's the assumption the
Mhm.
market's making. That's the assumption I'm gonna make, because that's what they always do. Like Nebius didn't build all those data centers for Microsoft yet, but they already contracted. So, anyways, if we translate that into the price to sales that we have for IREN today. Okay. I forget what the price of sales was. I should have just wrote that down. I forgot. Um, the stock is worth over $1,300. Best case scenario. A little wild to think about in 2.5 years, but I don't know. It's pretty crazy. Just like kind of think about that, right? Kind of crazy. Um, Worst case scenario, this stock is worth $434 billion. Oh, sorry. I'm sorry. It was 13. It was 1,300 billion is the market cap, which would put the stock price at 5,685. Okay.
Wait, what the market cap be? Can you
The
repeat that?
market cap is $1.3 trillion for IREN. Like it's a little extreme. Okay, it's a little
How?
extreme.
Wait,
Because
what?
so you have, so the price, this is assuming the price of sales for IREN, right? The price that, what, look at the price of sales for IREN. It's really up there right now, right? Like this is clearly not going to happen. Okay. IREN will not be trading at a price to sales of, I'm looking up right now. You want to look it up?
Yeah, I mean, hold on.
Actually got it on TradingView right here, I think. Where's my price to sales? It was like, it's like triple digits, I think. Like they're not going to be triple digits. Like get out of here, dude.
Yeah, dude, price to sales is like 20 something.
Yeah,
It's not
price to
normal.
sales. Price of sales is 31 right now. Okay, maybe it's 31. I thought it was in the triple digits. I
Yeah.
mean, I could actually calculate that right here, right? So if I have oh, you know what? That might actually be right. Hold on, let me whip out my calculators. 1302 divided by 40.7. Oh yeah. Okay. Price of sales is about 32. Okay. So we're calculating the price of sales for all of this revenue. So we're looking at basically a $5,600 stock, a $1.3 trillion company by the end of 2027. No, that's not going to happen, guys. Like that's ridiculous. Um, Base case, if they are still trading at 32 times price to sales, with the 13.5 billion dollars of annual revenue, they're trading at $1,800, which I think that's a little extreme for 2.5 years. So what we're going to do is we're going to take the price of sales of CoreWeave, which is at 11 times. Okay.
Yeah.
So CoreWeave is not growing at 167%. They're not, but they have a price to sales of 11. Okay. So how fast is CoreWeave growing? Let's see here. I'm just gonna look at it in the back end. So y'all gotta
Yeah.
trust me. CoreWeave is oops. CoreWeave is growing at, no, that's not right.
You
They're
want to
not
see
growing at
you want to see their revenue
730.
growth?
They're growing at 736%. No way. Top line. What's the top line for CoreWeave?
I mean, right now it's 3.5 billion.
Yeah, I know,
Um,
but what's their,
Total revenue growth rate
yeah, I'm trying to look it up. You got it
14
over there?
says 1400%.
Is it 1,400%? No way.
Yeah, I
Wow.
mean they're really new. What do you
Oh,
expect?
wow. Okay. Okay.
They
Okay.
went
So
from
maybe,
they
maybe.
went from 2.7 billion to 3.5.
All
You know,
right. So I guess they're growing that much. Why is the company only trading 11 times? That's odd. Anyways, so let's assume 11 times price to sales for IREN when they're growing probably in, I don't know, maybe double digits by 2027. Okay. So then that means that you got the market cap. Um, you got the
sorry.
market.
Let me repeat. The CAGR that they're growing at right now, the CAGR is about 378%. But
Yeah.
it's it's you're looking at it the wrong way if you do it that way. I mean, this is a brand new company. They just started less than a couple of years ago. So, all this super growth is not going to be sustainable over a long
No,
period of time. It'll
it's
decelerate
it's
significantly.
not going to be sustainable, but I think with a lot of deals that come through the door, what I can tell you is that with IREN, I believe that this growth rate is going to be triple digits for a little bit, only because of how
Yeah.
fast they're building it out, and then how much that they're going to be taking in
I
contracts for it.
mean, our boy
So,
Cleo Fields bought a whole buttload of it, and now he's up so much. Like that guy from Congress, Cleo Fields, he bought Iran. It's been doing nothing going up, bro.
oh,
He's
I
our
know
new
who you're talking
Pelosi.
about. I know who you're talking
He's,
about. Yeah, some of
he's
these
our new
politicians are
Pelosi.
crazy, man. Some of these politicians are crazy. So, anyways, we got basically $1,000 price target for 100% usage. We got $672 by the end of 2027 for pretty much the 80% usage. I mean, I think that's kind of like, let's even just say that the price target's like $500, right? That's a 10 times from here in 2.5 years.
Mhm.
That's nothing to complain about. But this is like assuming that they're just going to do the 2.91 gigawatts and that's it, right? Like
Mhm.
I feel like they're going to accelerate beyond that, right? I feel like there's going to be more demand because once they lease that out, I don't think it'll be like, okay, guys, that's it. We're going to build this and we're done. Like this is there are no. Actually, let's just play this. Let's just play this real quick. I want to play this. Share my screen.
Regional high performance computing data centers, and the business plan was simple. So for us, it was a whole new asset class, these regional high performance computing data centers, and the business plan was simple. Our thesis was that the real world would never keep up with the digital world. There's a fundamental dislocation there where the digital world is your demand driver, it's your revenue line. You've got adoption curves that are going vertical overnight, right? You have Bitcoin that didn't exist 15 years ago. Today it's gold 2.0 at a $2 trillion market cap. You had AI, which has been restricted to the hallways of PhDs for many, many decades, and all of a sudden over the last 18 months it's popped out of nowhere to be potentially one of the most society-defining technologies over the coming decades. But the real world can't scale exponentially, the law of large numbers. So for us, it was really simple. Use our expertise in infrastructure, data centers, and power, lock up a lot of power and energy, and build a high-performance computing data center platform, which we would bootstrap with Bitcoin mining. We don't hold Bitcoin, we mine it, we sell it every day. We're mining it at $35,000 a coin, we sell it at $110,000. It's a good business. But as a result, today we're sitting there with 810 megawatts of operating data centers that we're actively swapping out the Bitcoin mining racks and inserting NVIDIA GPUs to service AI cloud customers.
Okay, so what he's basically saying is that they're taking all of the existing about 900 megawatts of capacity and they're continuing to build it out, but they are pivoting toward AI cloud. Like they're not. They're probably going to continue their Bitcoin operations in British Columbia because that's all hydropowered. But everything that's in Texas, both both of the hubs that are there, in addition to the Sweetwater that they're building out, that is all AI compute. That's what he's just trying to say here, and he's saying that it's not that hard to do it.
You guys have been in the news a lot lately. You've obviously made a very large purchase of those GPUs that are coming in. You've had a bit of a crystal ball already. Where do you see not just IREN going next? And you talked about these can't be in major metropolitan areas. Where do you see, as Virginia is full, you guys are in Texas, but we're seeing Texas is filling up. Where do you see things going next?
It's a great question, because at the end of the day, that was the opportunity to front run a lot of these grid connections. And we've got 3,000 megawatts of secured grid connected power that we use 100% renewables. We've got a long development pipeline, but undoubtedly it is getting harder to get these grid connected projects. And if you're not grid connected, you've got these issues, right? Because you go behind the meter, all of a sudden your data centre destiny is now in the hands of a gas power station, all the operating risk, the financing becomes more expensive. So it's really interesting, because arguably we're still in the first innings of this exponential demand equation for power and data centres, but we're seeing all these choke points everywhere.
You have obviously a finance background, and we've seen such an incredible insurgence of capital into this industry. We're talking about things in the trillions. It's really a bit hard to sort of wrap your brain around how much capital is coming into the industry, but I love to quote Will Smales, who was on stage with me last year, saying, "Bankers hate change," but this is all change. So how, from the sort of finance perspective, are you looking at this huge growth, huge change in the technology, and how are they underwriting everything that they're looking at and doing and building?
Yeah, I mean, the capital markets are forming, and in some ways that's the last piece that's required, because if there's customers, and then it comes to gigawatt campuses mobilising, building out the multi-gigawatt campuses, mobilising tens of billions of dollars of capital in one tranche to try and go quickly, all the way through to smaller levels of GPU financing. And we're fortunate to be listed. We've got good access to capital markets. We've recently, and have you got the customers to use it?
Speaking of customers, we're seeing, it appears that Oracle is now in business with absolutely everyone. They've signed deals with absolutely everyone, but they're not necessarily going to be the end user in all of these cases. They have the credit rating, Microsoft has the credit rating, but they're not necessarily the end user as well. We're seeing much smaller companies that maybe don't have that. And how are you looking at financing when you're not working directly with the hyperscaler, or if the hyperscaler is involved in the deal, but they're not necessarily who's writing the check?
Yeah, so obviously the financing varies for both. I mean, both of the tranches we've secured in the last 4 weeks have not been linked to specific customers, and I think that just goes to a growing acceptance and comfort that lenders have in this space, that there is a deep pool of users. So yes, we all know that the larger users, there's a cohort of probably half a dozen that dominate a lot of the headlines, but below that we're seeing a real wave of demand from the smaller levels of AI, researchers, startups, scale-ups, and starting to see that small amount of enterprise there. So the market is becoming deeper, and as it gets bigger, we anticipate it getting deeper as well.
You're building some.
Okay, so one last thing that I wanted to play that's pretty important from IREN. And before I do, I want to address this, right? Where did Matt say that? Okay. If the market comes down, it will also go down a lot because it's high beta. Yeah, of course, right? Like you guys got to remember, first of all, the chart has just basically gone vertical. The chart's basically gone vertical for the last couple of months, right? It wasn't too long ago, and this thing was in single digits. So when you have that happen, you're getting a lot priced into the market with the expectation that they are going to deliver. But if there's any hint on the macro level that something might impact that delivery, which we got the tariffs before, and that impacted everything, this baby's coming down, right? How much it comes down, I don't know. But this is such high beta that when you have risk off, fund managers and institutions want to remove the biggest risk on their portfolio. Same thing with even retail traders, right? You're going to be like, let's say you're up like 2 times on IREN. Like, oh, well, the market's going down. Let me just take my profits and run, right? it's just fuel for the fire. Like, you have to remember that if you are a growth stock investor, you have to be used to these swings if you want to hold through it. But if this is a trade for you, completely different story, right? I have some things that are trades that I know in my head that when we break some levels in the SP 500, I'm going to cut them, right? I'm still debating on what I'm going to do with IREN if that does happen, but I'm not so sure I want to sell all of it. But I have that. I have such a low cost basis, so I have that optionality. But like, I have core. Everyone should have core positions where they know they're not going to sell this if it goes down. In fact, they're going to add to it. So everyone just keep that in mind. So I just want to address that. That this is not like this is going to the moon, guys. Like, this is not going to be an easy road if it gets there. It's going to take time. There's going to be a lot of pullbacks. We might even cut in half before then. Who knows? I'm just saying, like, it's better to know the story and know what you want to buy so that when it pulls back, inevitably when it pulls back, you will know what to hold on to. So I just want to play this last clip, and then we'll call it quits after this.
Oh, wait. Let me share one thing real quick before you share your clip.
Yeah, go ahead.
So this is IREN's website. Take a look.
Wait. Okay, go ahead.
It's IREN's website. Guess who their partners are? NVIDIA Supermicro and Dell Supermicro.
Oh, yeah, that's right.
So
I completely
just
forgot to
saying.
mention that. Yeah.
So all roads lead to the lead to
all
NVIDIA.
roads lead to NVIDIA, man. But yeah, no, for sure. Like, see, look, it's either Dell or it's Supermicro. It's one or the other.
Yeah.
But in my opinion, Supermicro is the better play here. They already
Yes,
had
sir.
great guidance, right? So Dell was the one that did not have the best guidance last quarter. But they're definitely going to win. But I think that the one that's mispriced here, could be mispriced, is Supermicro. All right,
Agree.
so let me play this last clip and then, oh, sorry, go ahead.
No, I was just saying agree.
Okay, yeah, so let me share this. Yeah, no, there's HP as well, but like it's mostly just Dell and Supermicro. Okay.
Yeah, it's a good word, isn't it? So a neo cloud is essentially a provider that makes available AI optimized GPU workloads. So over a VPN, people can log in and use a cloud service. And I guess to some extent we are a neo cloud, but we're probably one of the few, if only, vertically integrated neo cloud. So while it is true that we're making available an AI optimized GPU cloud service, we also own everything. We're fully vertically integrated. We own the power connection, we own the land, we own the data centers, we own the cabling. It is end to end. And that's a real point of differentiation because it allows us to deliver things at a cost level that is superior. We don't have co-location fees, for example. Performance is better. There's no latency in terms of services and ticket requests and when there's an issue because you don't have to lodge a ticket with a data center provider. We are the data center provider. So we've got people on site 24/7. And I think that flexibility, that cost advantage is contributing to the rapid growth that we're seeing. But the final piece of the puzzle is we have 810 megawatts of operating data centers where we are actively going into them, taking out the rack of Bitcoin mining ASICs, putting it to the side, and installing NVIDIA Blackwells. So the ability to get that flywheel going and service demand in live time is, I guess, in stark contrast to an industry that is really struggling on the supply side.
Really struggling.
Okay, so I mean that was something very interesting to hear. I looked more into it. Yeah, they own the land. They're kind of like Nebius for the most part. And Nebius does have co-locations, but they own everything, which keeps the cost the lowest. But they got to be good at it, right? It's not super easy to do all the contracting yourself. So this is definitely no easy task. But like I said, they got 810 megawatts of capacity right now that they are shifting over to AI workloads. So an interesting story to follow. Of course, guys, you're doing due diligence.
Keep it under 45 minutes, he said.
Yeah,
Chris was good today. Chris kept
you were
it
good
short.
today. You didn't play any. You didn't play any copyrighted content either, so you did very well today. Congratulations. So I think that about does it, guys. I'm gonna throw the timestamps in here probably tomorrow morning. Yeah, we went over a few stuff. We just did not go over App 11, unfortunately. But there's really nothing to say. Long story short, App 11 is not a buy for me. But this has come from someone who bought App 11 in the 200s and sold in the 600s. So way different from me. And yeah. But, hey, man, when's the new channel coming? Huh? When's the new channel
Working
coming?
on it. I'm working on it,
I
man.
want to be a guest on your channel.
We'll figure it out.
right.
Right now, I'm just happy with my BM&R gains, bro. My
Yeah,
wife
that's a
today,
nice one, dude.
she's like, "Wait, is that number real?" I'm like, "Yes, it is." Yes,
That's
it
right.
is."
That's right. That's right.
Yeah.
All right. Yeah, we're both in BMR. Life is good. Life is good. But I mean, just enjoying the music while it's running, and when the music stops
sad part
running,
is?
then that's when it's over.
You know what the sad part with BM&R? Most of the money that I'm gonna make on BM&R is pretty much going to taxes, dude. I've got so much short-term gain
Yeah.
taxes this year, so
I mean, it's a good thing though. It's a good thing.
yeah, I
Owing more in
guess.
taxes is a good thing. Means you made money. But
True,
yeah,
true, true, true.
better put that account into work, baby.
I
All
know.
right.